Greetings, everyone. This is Bill Fairman. Um, we're going to talk about the current market and what we can expect. We are broadcasting, well, I'm broadcasting live from the airport in Charlotte, and Wendy's broadcasting live from a hotel in Dallas. Anyway, more on the market right after this.
I felt
Wow,
like you should have said that we're in beautiful downtown Burbank.
nobody remembers that.
I
Um,
do.
I was looking at that graphic and I saw myself arguing with myself,
You'll never win.
but I'm always right.
That's right.
Um, so I have to say, oh, by the way, let me do the intro. How
Yeah,
about
that
that?
would be good. You don't have to
Hello,
tell us.
everyone. I'm Bill Fairman. This is Wendy Sweet. Thank you for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. If you are interested in borrowing any money for a real estate project in the Southeast, go to carolinahardmoney.com and click on the Apply Now tab. If you are a passive investor looking for passive returns, then click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and also, this is very important, sign up for Wednesdays with Wendy.
That's right.
Wendy donates 30 minutes per person each Wednesday afternoon to talk about anything real estate. So sign up. She's usually booked several months in advance. There's the Calendly link. It's also over in the chat side, which would be on your right-hand side or underneath, depending on the platform that you're viewing us from. Also, if you have any questions while we're on here, please don't hesitate to ask. We will do our best to answer them in a timely and informative manner. All right, so before we get started, I have to say this. American Airlines, once again, has not failed to disappoint. So, I get to the airport early when I'm traveling, so I can do this live shot, and I typically will do it in the Admirals Club because they have a little business cubicle that I can get in and have a little bit of privacy when I'm doing a live shoot, so to speak. But they have the big giant one closed, and they never notified me that it was going to be closed. So I go to the little one and I can't get in because there's too many people. So then I have to trek all the way across the airport to the Centurion, where I still didn't get what I wanted to in the first place. But it's a beautiful surrounding,
Yes,
and the food is much better. It's just a lot further away from my next flight.
There's something funky on the ceiling, though. That's interesting.
Those are little leaves that are decorations around the lights. I don't know. Somebody spent a bunch of money.
Very nice. I'm here in Dallas because I'm out early for Freedom Founders, but I came out the day before yesterday so that I could look at a new self storage facility that we're buying, and it's amazing to me how much self storage mirrors just a regular old fix and flip and how you look at it.
Mm-hmm.
Um, when you're thinking about the due diligence and how it works, it's amazing to me how it really mirrors. It's just a few more zeros, is what I tell people. But even in this dinky little town that we're looking in, it's amazing to me too how well self storage does across America. I'm just blown away by how much stuff we Americans have and continue to store. And it doesn't matter what your demographic is. It doesn't matter what your income is. It's everybody's a player, and it's or a potential client, I should say.
Sure.
It's just it's amazing. I can't wait for us to dig deeper on this.
Well, too many people are um, emotionally attached to stuff,
Mm-hmm.
and especially if it's stuff that was in the family for years and perhaps it was passed down to you. You don't really have a place for it, but it's got memories and you don't want to get rid of it.
Yeah.
And so it's a good business to be in. We will. Um, and Scott mentioned this earlier. It's a good idea. We're going to do a show dedicated to the due diligence that we did on these two properties that we're looking at. They're two completely different types of properties. We're
Mm-hmm.
buying them at the same time, or at least at this point, we are going through the due diligence. Our intention is to buy them. We may or may not, but at this point, that's our intention. And then we'll do a show on how we went through the due diligence process and whether we chose them or not, what the process is.
Right. Well, one of them I have to do. My 1031 exchange is wrapped up in it. So,
Okay, do you know what a tease is?
yeah.
You're ruining it.
Yeah, well, I can't tease the 1031 people.
Well, they're not our viewers.
That's right. That's
So
right. It's interesting. Very interesting.
let's do a little breaking news, shall we?
We shall.
So 30-year fixed mortgage rates are only 10 basis points short of 4%.
Ouch.
I know that sounds like ouch, right? Um, I still go back to they're still very low. They're still under 4%. Give me a break.
I know
Um,
it's ridiculous that people are even cringing a little bit about it.
it's all relative. We still go back to when I bought my first house and they were 14.5% for an FHA loan.
Mm-hmm.
They had gotten as high as 18.5, I think, before they started coming back down again.
Mm-hmm.
So people still bought then. It's not an issue. But um, one of the things I would like to talk about is the Fed. And we know they're going to raise interest rates, short-term rates. That's all they can raise is short-term rates. And at the same time, they're probably going to start clearing their balance sheet, which means they're going to stop buying treasuries,
Mm-hmm.
and they're probably going to stop buying mortgage-backed securities as well, which means their rates are probably going to go up in the short term. Long-term rates will go up in the short term, if that makes sense.
It does. It does. And but I believe too that, and from what I'm hearing anyway, is that they're actually going to go up higher than we originally expected that they would. Um, and couple of things
Why do
about
you think that?
well, if you'll listen to Sunrisers on Friday mornings, we have a great guy, Brian Maddox, that comes on and talks about the market updates and what he's hearing out in the marketplace as well. And um, things are not falling into place like the feds had hoped, I guess is a great way to put it. So they're saying that they believe that the rates are going to hang in there just a little bit longer as a higher margin. And the thing that's I think really unique is that housing starts are actually down at this point, and we still have a severe housing shortage. So, what does that really mean in our market? Does it mean that real estate is going to continue to grow and appreciate like it has? I don't know. We're kind of in a situation we haven't ever really been in before. The other thing too is, the big 7.5 inflation rate that we're seeing, we know that, the government has been manipulating true inflation for years, the numbers that they're using. And for them to come up with 7.5 when, they're doing everything they can to make it look lower, it's really a lot higher than that. Watched a great video by David Phelps with Freedom Founders that talked about that 7.5% inflation rate. And he said, really, when you put the realistic numbers in there, that we're really looking at more like 12, 12.5 on an inflation rate, which is huge, way huge for us to try to live with. And I'm just really anxious to see how that's going to affect us. I heard another person say that the supply chain isn't going to change much very soon either, and that's another big problem, falling into these high interest rates and that kind of thing. So,
Well,
go ahead.
no, no, no. I was going to let you finish there just for a second because while while I may not be able to attend sunrisers all the time,
I know you read. You're a big boy.
I also have aligned with Brian because I
Oh,
texted him yesterday
get the
to
direct
get his
news.
beat on it. See,
Yeah.
I don't have to attend the meetings. I just text him. Um, so what I hear is that while short-term rates will definitely be going up, it's not going to help inflation. Inflation is going to continue because there's a lot more to inflation. We have a whole bunch of government spending that's still in the system, and it takes a while for that to work through. You have too much
Yes.
money chasing too few goods. We also
Yes.
have a supply chain issue, so that makes the goods and services, um, the demand for those even higher because
Yes.
there's a shortage of that. And you're going to have the same thing with the housing. Um, Randy Vetter was kind enough to send me over a link to interview with president of the National uh,
Right.
Residential Builders Association,
Mhm.
and he was mentioning that it's taken 3 to 4 months to get supplies, appliances, cabinets. Lumber prices have gotten so high that on average, it takes another $19,000 to build your average house just
Right.
for framing timbers.
Right.
Um, there's a lot that's going to hit the market that raising short-term interest rates aren't going to help. We will probably end up in 2023 at some point in that year, uh, starting to go into an inflationary period,
Mm.
which means the long-term rates will probably start to come down. Because as business activity slows down, you're going to have to end up, and I apologize for the public address announcement while I'm talking.
We can't hear
Okay, good. Because I certainly can, and I have noise canceling headphones on.
it.
Anyway, I think those long term rates are going to come down, and even if we go, some of the J.P. Morgan, Goldman, all those guys are predicting 7 interest rate hikes
Yeah.
before they level out.
Yeah.
So if you have four, that's and typically that means a quarter of a percent each time, but it doesn't not necessarily. They could go up 50 basis points, but you're probably not looking at more than 2%. We had a roaring uh, housing market when rates were at 6.5%.
Yeah.
So in retrospect, I'm not too worried about residential housing. Um, in my view, as long as your investments are in recession resistant businesses and um, real estate, as well as residential stuff, staples that people need all the time,
Mhm.
you can't go wrong.
That's right. People always need a place to live. On the flight out here, I downloaded a book called Thank God for Bitcoin that was recommended to us by one of our guests that we had a couple of weeks on. on this show.
Surprisingly enough, he invested in Bitcoin.
Yeah, so I really bought it because I, wanted to learn more about Bitcoin, and I listen to things at a faster speed, so it'll keep my attention. But I'm probably, I would say, a third of the way in on this book, and they have spent that entire time talking about the history of money and the history of silver, gold, from the Roman Empire up. I
Yeah,
mean, it's very, very interesting the way it talks about money, how it's created, why it's created, how things are affected by it, and not just addressing, of course, our government here in the U.S., but nationally throughout the world, worldwide. So globally, I should say. So it's amazing how they are able to explain it in third grade terms. That was easy for me to understand where they were coming from. So I highly recommend that book to anybody who wants to learn not only a little bit more about Bitcoin, but to just go through that history on money. They do such a fantastic job. It's called Thank God for Bitcoin. Really
yeah,
good stuff.
and I know Wendy said it was written like a third grader could understand it. It doesn't mean it was written in crayon, right?
No, no. And there's no pictures, so we're good.
Yeah, I was going to say a few words, a lot of pictures.
But I mean, as Osby's talking about it, I'm thinking to myself, this is just like Monopoly. There's money and you can produce more of it. And it's, it kind of makes you feel like you're hanging off the edge of a building with no net.
Right.
It's not as solid as we all think that it is. So anyway, I think and I'm talking about our current currency, not Bitcoin. So
The,
it's really, really interesting. I highly recommend it. Thank you for
I
putting
like it.
that on the screen.
I like that. The current currency.
Yeah, very much.
So I'd like to do a plug here for our business. I know most of what we do here is educational, and occasionally I'd like to plug our business. This past year has been really good. We are, as we tell you at the beginning and at the end of every show, we are lenders in the Southeast. We had been traditionally doing short term um, hard money loans for fix and flip and buy and holds that need a little work, um, short term bridge loans for small multifamily and self storage. We added a long term rental program,
Too, actually.
essentially to help some of our short term borrowers be able to refinance out to something long term once their project is finished.
Hmm.
And it's really taken off that program. It's awesome. Um, you're
In fact,
talking,
you can do the portfolio loans, 20, 25
yeah,
properties in one fell swoop, apartments.
yeah,
It's amazing what that and the numbers, like the rates that you can get and the cash out that you can get, really surprises me. Really good, solid programs, 30-year terms, and they base it off the property, not
right,
not you or your tax returns.
right. And keep in mind too, in this kind of economic environment where you have a lot of inflation, you need to look for cash flowing assets that also um, have an upside potential to them. So real estate is going to continue to go up in value, and if you can have an asset that goes up in value that pays you an income along the way, at the same time, if you have it levered or if you have debt on it and that debt is fixed for a long period of time, you're paying it with today's dollars 10, 15, 20, 30 years down the road.
Hmm.
So
Hmm.
that's a great hedge against the inflation,
Right,
right?
right. And they actually address all of that in the book I was telling you about earlier, about the value of money now versus that same amount of money, that value down the road. And how important it is to be able to the how it is better to just use other people's money
Right.
and use your cash to invest in more.
But you need to use it wisely. Um, you don't want to over lever a property. In 2008, that's what happened to a lot of investors, that you were able to get 100% financing on investment property. That's crazy.
Right.
Um, you need to be no more levered than 75% loan to value. So I'm being forced to wear my mask while I'm talking. So
Somebody said that's why I
yes.
left the Admirals Club
So
yesterday because they kept
anyway,
telling me
as
the same thing.
I'm going to wrap this up. Thank you so much for joining us on the Real Estate Investor Show.
Ah,
Hard money for real estate investors. We are Carolina Capital Management. We are lenders in the Southeast for real estate investors. I'll be so damn happy when this is over with. Um, don't forget to like, share, subscribe, hit the bell. If you want to buy us some money, go to carolinahardmoney.com. Damn, now I'm fogging up my glasses.
well, just don't wear it, Billy. They're not going to kick you out in front of people.
Yeah, well, anyway, what else is left? If you're a passive investor, go to carolinahardmoney.com and click on the accredited investor tab. We'll hook you up. Don't forget to subscribe, hit the bell, like us, all that good stuff. Have a wonderful week. We will give you some highlights on what we did at Freedom Founders when we get back. Everybody take care.